The Insurance Brokers Podcast is brought to you by Sarah Myerscough of Boston Tullis.
Welcome to the Insurance Brokers Podcast with your host, Sarah Myerscough. This business podcast is for ambitious brokers determined to grow their business. Our guests are highly experienced industry experts and innovators. This is the place to leverage their success, learn how to break through barriers to growth, and discover a community of support and ideas whilst growing your business.
Okay, good afternoon, Bryan. Thank you so much for joining me on the Insurance Brokers Podcast. It's really great to have you here.
It's my pleasure, Sarah. Thank you for having me on.
I'm sure anybody that's listening to the Insurance Brokers Podcast has heard me talk about your book, because any recordings I've done over the last couple of weeks, I've been saying, I'm reading this really interesting book. So,
It's fantastic.
It's been fabulous, really interesting. So, Bryan, I've learned lots from your book. The way that you've gone about writing it is really interesting. I wonder if you want to introduce the concept, the idea, where it came from, to the listeners.
Yeah. Well, so it's part of a series, and I'll give sort of a high level on the series and why this particular book needed to be written, because originally it was only supposed to be one book, not a whole series. So I'm a carrier guy for 20 years on the P&C side, and then I left after running claims for Hiscox, which I'm sure many of the Brits listening will know the name. In the US, it's less known, but I was running claims for Hiscox in the US. And I had started to be an early customer of this Insuretech startup that was helping carriers in claims with communication. They asked if I would join. I said yes. And so I got to see the other side of the coin, and sort of like what's going on from a technology standpoint, from a change standpoint. And my role was specifically growth. So I was the one out, visiting all these carriers, trying to drive business and help us succeed. Which means I was sitting with all of my former peers at these carriers, talking to them about their struggles and how we could help with them, but also why they were afraid they wouldn't be able to implement the solution, or why it sounded great but was too hard because of politics and technology and budget and all the things that we bemoan in the industry that are very real. But we can still do something about it. We can still find a path through to be better. And, pre-pandemic, it was necessary, but maybe less of a burning platform feeling. And then everyone goes into lockdown and it literally becomes a question of, can we even keep the lights on? You can't just not resolve claims for the next year and a half or whatever it's going to be. You can't just park your new business growth because you can't meet with people in person and that's the only way you did it. Life insurers like, well, we can't go get blood and whatever other fluids we need and medical records and this sort of thing. So we're just going to say no new business for the next year or two. Like, that is unacceptable. So even though it's hard, we can still find a way through. And what I found was there's a really important need in the industry to share some of the stories of those who are doing it so that we can all take a bit of inspiration and see, well, hey, they're facing a lot of the same constraints I am. They got through. Maybe I can too. And so it's a bit of like a self-help book, if you will, for the industry about how we can overcome.
I have taken an awful lot from the book, and I'm obviously not trying to set up a carrier or an MGA, but some of the stories that you've talked about have resonated with me from a mindset perspective. There's a massive amount of mindset, and there's like an entrepreneurial drive that is clear through each one of these stories that you've talked about, whether you come from corporate background, insurance or elsewhere. That's very clear.
I love that you take that, because some people get frustrated. They're like, you didn't tell me which specific technology I should implement for this specific issue. So, well, that's that's a bit irrelevant. Like, we can figure that out. We can talk about your needs and what's out in the market and all that. But if that's what you're looking for, hire a consultant to solve that particular need. That's not what's going to change your business. And it is values and mindset and attitude and how you're interacting with your customers and your employees and how much lip service versus actual empowerment you're giving to all of those constituents who are so important. And you're right to point out, this isn't just for people at carriers or thinking about being at a carrier or starting one. It's, the case studies in the first book were 7 legacy insurers. I think the youngest turns 99 this year. Most are already over 100. So they're companies that have been around for a while. And of course, myself, having been around the London market for a while, we're talking hundreds of years. So, I thought it was really important to start there. But the second book is all startups. And this is where, for me, the idea of the startups was this disruptive threat in the first book. So we had all of the things that sort of handcuff us, or the headwinds that we face as we think about change, and all the reasons we can't. And not only are customers demanding a change from us, but we now have this fire lit under us from all of these disruptive startups who seemingly have, nothing but freedom to do whatever they want. And, they're super tech savvy, and they all come from outside, and they're bemoaning us and calling us stupid and lazy and backwards and all. So it's a very sort of adversarial, unfair feeling. And I wanted to speak to that. So that was the first book. And what I realized coming out of it is, well, look, and I say this phrase too much, perhaps. I need a new catchphrase, but grass is not green anywhere unless you
Unless
garden.
you garden. I
Right?
picked that up. That was
Yeah.
one of the things I wrote down.
I don't know why it hit me a few years ago, and it wasn't talking about insurance, but I was like, oh, it's brilliant. Because what we tend to do is, we look at someone else on Instagram and how perfect their life is, or we read a case story, or better yet, as we're starting to go to conferences again, whoever's on stage talking about what they did, it's all polished. You see the PowerPoint, and it's the perfect, we went with this vendor, and it was faster than we expected in the scope, like we out delivered it, and it was cheaper, and the ROI, like that's not what happened. We all know that's not what happened. It wasn't perfect, but that's what's presented. So we can look at these startups and say, oh, they have it so easy. That's not relevant to me. And in fact, they don't. They have some of the same barriers you have. They have plenty you don't have, and they have threats you will never have. And they lack a lot of the assets that those of us who are, I say those of us because I was on the incumbent side, those of us in the incumbent space, whether it's broker, carrier, whoever, we have a lot at our advantage, to our advantage, that they don't have. And so I felt, rather than just seeing them as adversarial, why don't we dig in and learn? And that was the genesis of the second book, is 8 case studies of startup insurers. And I use the term a bit loosely because some are MGAs still. Some are already carriers, and they were MGAs. One of them was an agent, a digital agency or broker, and then an MGA, and then a carrier. But there's so much to learn from it, and to learn regardless of where you sit. Because the lessons, as you say, it's more about mindset and approach and thinking about what you face in a different way, which often takes breaking out of your context a bit.
One of the things that I really liked, so you talk about seed funding and different rounds all the way through,
Yeah.
and there are some big numbers, right?
Yeah.
Big numbers
Especially
that are
in the US
happening.
market, where they're a bit insane. Yeah.
Yeah, it's intense, and I was kind of looking at it, from my inexperienced view of that type of scale and that type of investment. And I was sort of looking at it, and some of them, like, they hadn't even started trading, and they were on their like second, third, fourth round of seed round.
In the hundreds of millions raised already. Yeah.
Yeah, and I was starting to feel, agitated, and oh my gosh, how are they going to manage this? But that's what I really liked about it, because you've given the good, the bad, the ugly. You've given like the the existential crisis points at where this could go wrong, and for many would go wrong. And I loved
and for some did go wrong.
And 100%. I loved the uni guys.
Oh, right, for Beam Dental.
Beam, that's it, Beam
Friends,
Dental. To have thrown it all in with actually very little life experience, and have
none.
gone in,
Yeah.
done a little bit of kind of consultancy, and gone, oh, I'm going to make this toothbrush, to then go out and find that the entire market's gone, not really that interested.
Yeah.
The resilience and the power of mind and self-belief in what you're doing to go into a market you do not know with a proposition the world has told you is flat, and still make headway is an incredible feat.
Yeah.
How which begs the question, right? How do you know whether you're flogging a dead horse or whether you should just keep going for that extra round of funding and hope a bit more? What came across to you out of all of these stories where people knew which way?
Yeah. So I think that's a brilliant example, because, and I said this in the book, that was the moment, they had this connected toothbrush that the data coming out of it could drive underwriting and could change the losses. It was brilliant. Really, really great idea. And they pitched it to all the carriers to make this money losing line that is dental insurance profitable. It's an also ran add-on that basically all but one carrier in the US essentially just add to their other benefits offerings, because they have to be able to compete. You have to have the complete offering. And so dental is going to be shopped, even though you don't expect to make money on it. You're probably going to lose 10, 20 points. So because of that, there's no ROI in dental, which means there's no money to invest in dental. So the entire industry, and they talked to every major carrier, literally said, no, haven't you heard, dental's a lost cause, just give up and leave us alone. That's the moment where most founders would say, pack it up, guys, we failed. Great journey. We sold a few because they were selling the toothbrush themselves. And
Yeah.
we made a little bit of money on that. We had fun. What a great ride. We're engineers. Let's figure something else out. But because they're engineers, when you tell an engineer the answer is no, or it's impossible, they add something to that sentence, and that's right now. So they will say, well, why don't we try to figure this out? Because that's what we do. And that is what they do. And so for them, to the mindset point, it was understanding enough about the fundamentals of the idea and the mechanics necessary for it to succeed, and then seeing mechanically, why is it not succeeding? Is that solvable? Whereas a lot of us, I think, we're used to that no. And so when we hear it, we just sort of deflate and go on to the next thing until we clock out that day.
But you make a really good point, and I forget which particular business it was, but and it might have been Beam, and it is why? What is the data supporting your no? And there was one pivotal moment where the knower, the person who's saying no, went, well, there isn't any actually.
Yeah.
Like,
So it was Kin was the example there, and Kin was a startup homeowners insurer, and they were an MGA at the time. And they said to their fronting carrier, we want to do X, and the front said, no, you can't do that. It's illegal. And they had been getting all these it's illegal or it's impossible answers to literally everything they wanted to do. And so finally, I think they were so just over it and annoyed that they just said, okay, show me the law. Show me where that's the way it is. Show me why it's impossible. And what they found out is time and time again, there was no evidence. It was industry lore. And I think a lot of us are used to that. It's passed down, or someone was afraid of something, or they misunderstood something, because some of these regs are not always easy to interpret, or one person's interpretation is different than another's. And when luckily the fronting carrier was willing to look into it and found actually it is completely legal, it is doable, we were wrong. And so then they moved ahead. And it's the willingness to challenge is really critical. There's a few other things you need in place to be able to do that successfully. And that was, the team at Beam had some other things at their advantage, being engineers, having access to, capital and the ability to do something with that data and monetize it in a way, or bring it into the equation. Because if they were just building a toothbrush and didn't have any of the other skills that they had built out over the years through their consulting practice, they wouldn't have been able to do that. But, as they say, like in hindsight, Steve Jobs' famous talk about connecting the dots in hindsight, that's really what they had done. They'd worked in all the little bits and pieces, the data science, the app development, the hardware development. They had done a lot of work in a regulated space on patent writing. So they were really comfortable and familiar with the idea of needing to write things for legal reasons, needing to stay compliant with them, how you research that, even though it was a different kind of compliance. The mindset was what an engineer can lift and drop into a different context. And they also recognize we don't know everything. So we want to pull in more talent and more skills, but it was that openness to it. That's really critical. And sometimes the answer is, we looked at it and actually we still don't have the ability to do this. So maybe the answer is to pack it in. But in other cases, we've distilled what the holdback is. Here's how we think we can solve it. Is that a business story? And one of the great ways to test it is start talking to investors. And what they found is it was quite intriguing to them. And so they've done a number of raises. Is one of these issues I had with writing the book about startups. There's always some news coming out. And so I'd finish the case study, because this is all firsthand research. I sat with the companies virtually, lots of interviews and discussions. And this wasn't like I just read a bunch of PR pieces they had put out and then kind of told my own story on it. So I'd put in all this work in the case study. I'd finish it up and say, okay, that one's done and dusted. Onto the oh no, here's a press release. And it is one I had to bring. It was like, so Beam raised, I think, $80 million like the week after I had written the case. And so I'm like, okay, gotta reopen that file and update that. And it happened time and time. One of them raised $250 million while I was like just wrapping things up. And of course they can't tell you any of that while you're meeting with them. So they're like, oh, we wanted to let you know, but we weren't allowed to. So yeah, the stories had to keep it. And it happened like the day before the official launch of the book, another major funding round was announced for Branch Insurance, another one of the cases in there. And they're like, oh, I just talked to them the day before, and they're like, we wanted to tell you, but so I'm
Oh,
happy for them. It's all good reasons, but
yeah,
it
yeah.
is it's such a buoyant, fast moving space.
It is, isn't it? Fast moving, and I think one of the points you make in the book is you can have a day. I think your point is some of these people go through stuff you'll never experience.
Yeah.
That the highs and lows, the depth of those highs and lows in a very 24-hour period.
Yeah.
It's just, it's kind of mind blowing. And I suppose you have to be a certain type of person to be able to withstand that.
You do, yeah. And some people don't realize it going in. But having been at a startup, it's one of the things you need to look for in recruiting is, it's an exciting job. It looks like a cool place to work. You get shares early on. Like there's reasons why people think that's exactly what they want to do, and it sounds great, but it is a different lifestyle. And there's some that balance it better than others, and there's some that are way off the charts, in terms of the demands that they put on you. So, it can still vary, but startup life is very different from corporate life. And I've worked at some really entrepreneurial corporations. But even still, I've worked at Hiscox, worked at Beasley in the US, like both very young in the country, growing really rapidly, fantastic organizations. But even still, light years away from a true tech startup, which is, it's a totally different pace. And the uncertainty, the ups and downs, the culture being so tied to the founders' personalities, and how they're feeling on any given day, like that's all very real.
Do you know what? It is very real, and it is a dream that I have been living for the last 18 months.
Yes, you get it.
Yeah, 100%. And one of the things that made me chuckle a bit is we've got a proposal outstanding with one of our specialist insurer in the UK, and they sent us the procurement forms, right? And there's things like, do you have planning for sort of the capacity to do the work and succession if somebody's not there? Well, we're a small team, and actually that's quite a difficult question to answer.
Yeah.
Because there is just no way that I cannot be here. It's just not a thing.
Right.
For now, but ask me again in a year, and I, those kind of things will start to have come in. But when you're right in that growing, and we've spoken before about the other business that we're about to launch as well, you're right in it. It's got to be you, and it's got to be managing every single aspect of every single thing, whether or not you're the expert in it.
Yeah.
So one of the things that you say in your book is, and you give evidence, and it's something that I've experienced here, you need your sort of exec board to be like a whole person, every capability, every different type of personality, to make sure you've covered everything off. Now, my partner at Boston Tullis is my dad, and we're literally the same person. And we often get caught in our own loops. Yeah. And we often say that we are, what we lack is the completer finisher type person. Yeah. We're both, the ideas excited, sort of big strategy thinkers. Yeah. So I was really interested in that, and we, it sparked off a whole load of conversations that we're having at the moment. Tell me a bit about that. Give me some of the examples that you talk about in your book. I'm particularly interested in Thimble. They were a good example of it.
Yeah, I mean, there's a number of them, and I would say it stretches beyond just the leadership, but especially in the leadership, because otherwise you end up taking the whole company in one direction, because especially to start up, as we were saying before, the culture follows the founders and the leadership more broadly. So you have to be especially keen on that. Thimble, Neptune, all of them really have these stories where there's a particular skill set that the founders lacked, and they rounded out, and it was a game changer. And the one that stands out to me, because I think it's not what anyone would expect, is around compliance. And this, interestingly, this kept coming up literally in every single case, one way or another, either because they had recognized just how important compliance is, and instead of seeing it as adversarial, and I think many of us in the industry know what I mean by that. It's like, you have your idea about a new product or a new way of going about it, or coverage or pricing or whatever, you want to get it to market, and you hold compliance at bay until the very last minute, because they're just going to be difficult, they won't understand, they're going to tell you no, And you go through them, and sure enough, that's exactly what they do. Because what do you expect them to do when you give them no time and you're sort of forcing something down their throat? It's not going to sit well. And so then there's a bit of a battle, and maybe someone more senior overrides them, or you all lose, and you don't get to do what you need to do. So that's how many of us in the industry operate around compliance. And I've seen a few carriers who think about compliance differently, as something strategic. Let's bring it into the ideation phase and see, can we build this in a way that we don't have any issue, and can we bring them along for the journey so that the internal watchdogs who are trying to protect us externally are part of seeing what the business is trying to achieve, so they can think about, well, what are other ways we can do it if we do come up against one of those difficult moments where something's not possible, or seems like it's going to potentially lead to some hot waters, or maybe something that for our brand, that's not how we want to operate. Others may choose like, oh, we'll just pay the penalties and so be it. Some carriers operate that way, some don't. And, not begrudging anyone, but generally I would think you'd want to operate in a way that doesn't run afoul of regulators. So a few of these folks, not being insurance people, recognized or had it recognized for them. So in Neptune's case, it was their investor who had just come from the fintech world where he had built a regional bank. So obviously very much a regulated space as well, differently so, but heavily regulated. And he saw in their hiring plans, when he was evaluating the company in due diligence, bring in compliance expertise and blah, but it was a bit out because they weren't live yet. And so why do you need compliance if there's nothing to comply with, because you're not in the market? And he said, you're thinking about this wrong. This isn't the last stage thing that you need to accommodate later. This is something you need in at the ideation and the building phase. And he was willing to pay for that. So of course they were like, okay, that's fine. I'm sure it was more strategic than that, but it's, they were welcoming of it. It was definitely useful advice. And so they brought in someone to be the chief risk officer who had also that compliance sort of mindset. And talking to the founder, it was a game changer for them. You mentioned Thimble. Thimble does episodic and subscription-based professional liability and GL and commercial lines, small business commercial lines coverage. So think about, you're a wedding photographer. If you do this as a side hustle, do you need to have a policy that's 24/7, 365? If you just have, a 4-hour engagement here or there, and they're sort of ad hoc, you don't even know. I don't know it's every single weekend. So what I would rather have is coverage I can, flip a switch on my phone, enact the coverage for those 4 hours and pay for those 4 hours. And the rest of the time when I'm not a wedding photographer, I don't want to be paying for coverage for something I don't have or don't need. And so that's a brilliant idea and completely illegal. So this is a case where like, no, that's illegal, because in the actual state regulations in each one of the various departments of insurance is this conception of the term of a policy. And it is incepted at 12:01 a.m. on day one, all the way through to 12 a.m., 365 days later, except in a leap year. So they're all this annual conception. And so for carriers who have wanted to be more responsive to the way the nature of work has changed, where we have gig work, we have people doing multiple side hustles, we have people who are doing sort of this episodic thing, or especially in the face of the pandemic and the uncertainty that brought, you may be an ongoing business, but you don't know if you're going to go on much longer. So should you be paying for an annual policy? Is that more commitment and cost than you can handle right now? You're taking everything day to day, maybe if you're lucky, month to month. So what if we could do this as a monthly thing, just like, so many other things that we have in our lives these days? But there is no conception in the regulations for that. So existing carriers, the only way you could solve for it is to cancel and rewrite. So when someone wants to switch it off, you cancel their policy. When they want to switch it on, you rewrite it. That's unbelievably labor intensive. If you've been in a carrier, I'm sure you know what cancel rewrites are like. There's lots of financial adjustments. The policy number will change. So from a customer standpoint, it's not great. They're not just turning their coverage on and off. They're getting a different policy every time. And each one of those moments, depending how long it's been, they may have to reapply for coverage, which means why wouldn't they just go to market? If I have to fill out an app for you, I might as well see if I can get a better deal. So each one of those cancel rewrite moments isn't just turning coverage on and off. It's a time where someone might attrite and go somewhere else. If they're working with a broker or an agent, they might go direct, or vice versa. So it's not just cumbersome to do things that way. It's incredibly risky for your business's success and growth, and or it could be shrinking. To solve for that took a really strong compliance capability, because you need someone who not just understands what the regs are, which say you can't do this, but actually is willing to help you engage with each and every state regulator in all the states you want to be in. And by the way, the ones you really want, because they have the most economic activity, like, you know, Florida, California, New York, like, they also tend to be the most difficult. You know, they have the most regulation. There's many states that are just sort of like, you can file it and start using it. That's fine. 30-something states are like that, really not a challenge. But the states with the most economic activity have quite a bit more scrutiny. And there's waiting periods and review periods and all that. So nothing wrong with it, but it's a lot more to go through. So you must have a good way to engage with those regulators. And, you know, you're going against their regs. So you need to help them to see why actually this is a good thing, because the regulations are there to protect consumers, to cover them adequately, keep them safe, and make sure those promises are kept by the carriers. So if you're trying to go against that, you have to help them understand why that's of value. And that's not always a tough sell. Sorry, it's not always an easy sell.
Yeah, but what you've said there actually resonates through the whole book, not just helping the compliance people to see what it is you need them to see, but every single one of these stories has started with a consumer problem, which is absolutely not insurance based at all. It's a consumer problem across a whole range of different industries or, you know, personal needs. I love the guys that went all out to change the medical healthcare system.
Yeah.
Like, I mean, that's, you did not wake up in the morning and think, I'm gonna, you know, make a really successful business. You woke up and you went, I'm gonna change the world, and it's gonna be really hard, and I'm in it for the long run. Like that type of mentality is insane.
That's a humanity question. It's not about like, oh, we think health insurance could be more profitable and lower cost for customers, so win-win like that. Like, yeah, it can do that. And the problem is not health insurance. The problem is health outcomes in the first place, and how much we're spending for worse outcomes than the U.S. spends the most and is like 40-something for just for mortality. And so, not that that's the only measure, but like, if you've been to the U.S., we're not the healthiest of people, so it's not working.
But what? So I did a podcast this morning. We were talking about customer journey, and we were talking about lots of different things. This idea that you start from where your client is a bit cliched, right? People jump on that. We're client centric. We're like best customer service. It's all over the place. In 90% of places, you've missed the actual concept. You've missed what this is talking about. So this idea of customer centricity, I'm still telling you why my solution is good for you. You've missed the point. If that is the place you're in, you've missed it, and it's not right. And something you said in the book, and I forget which case study it was referencing, and you'll probably be able to tell me. It was about if customers are not buying what you are selling, then you're not engaging in the right way. You might have the great product for them, but you're not speaking to their wants or their needs. You're speaking to your solutions. And so that for me was really interesting, and it's something that I believe quite strongly in, and you articulated it in a way that I've never been able to. I'm going to pause that because I've got a question for you, and it relates back to this issue.
Sure.
So I had a debate, I suppose. It's a debate we have often because it's fun in the office. And David has been in the insurance industry for 40 years, consolidators, you know, senior management, all that kind of stuff, and has done an awful lot of different roles within the insurance industry. So it's, you know, far my senior in every sense in that respect, and I wouldn't ever tread on those toes because I can learn a lot from him, and I do on a daily basis. But one of the things we talk about often is, since the 80s when Direct Line changed personal lines, right? There's been a lot of rhetoric about changes are coming. It's like the whole market's going to change. You got to get on it. You got to blah blah blah. But actually, fundamentally, broking is a relationship-based business, and commercial insurance is always going to require a person, right? So is it? Has it? Will it? and you take that to all of the stuff that your guys are doing, and I think it is will, but not in the way that the world has been telling us.
Yeah, that's it. That's exactly what it is. And literally my first day in the industry, that's what I got. Someone came and sat at my desk and was telling I was doing consulting work at a major carrier, and they sat down and were telling me about the project we're doing, which is about this e-commerce thing. Like the letter I hadn't been invented by Steve Jobs yet. It was all E was everywhere. And he said, he's like, you know this internet, right? We're going to see like no agents or brokers in 5 years. So this internet thing, and it was like you couldn't just say the internet. It was still like you had to use other words around it to describe what it was. This internet thing that they've got over there, because we had barely just gotten it in the company. Yeah, this internet thing is it's going to put distribution out, and just watch. And I've literally heard that same war cry told slightly differently, but the 20 something years that I've been in the industry, and it's not happened. And if you look at the share, actually, putting aside personal lines for a moment, which is still largely the same, but has shifted a bit, it's basically held constant. And that's really interesting. I mean, look, I worked at Hiscox in the US. We were the only direct writer of small commercial in the entire market. And every single year, McKinsey or someone else put out a report that like Hiscox is about to have all this competition and the whole market's going to go that way, and just watch. And so every year it was like, okay, are we going to lose this this sole player status where we can say we're the number one direct writer because we were the only. And every year nothing would happen. And then we finally started to have some competition and it wouldn't take hold. And now it's a little bit different. There are some players starting to come in. Next Insurance, who I talk about, but they also work with brokers, and they just started appointing agents as well. So what you find is this whole like it's going to be Armageddon. There will be no agents or brokers. I think that's foolish, because the reality is that presumes it's just about market access, and there's nothing else that anyone would ever need when it comes to buying insurance, which is grossly oversimplifying what risk is. So I don't believe that agents and brokers will be gone, full stop. I think that's ridiculous in any line of business. What I do believe is how they work, what they do will change, and has changed dramatically. I mean, for people who have been at it since the 80s, the tools they use are not the same. The way that they interact with people are not the same, certainly on the back of the past 18 months or so. So the reality is what we do and how we do it will change, as it always has in every line of business, in every industry. That's the world, and that's fine. So could we have more digitization, better tools, better intelligence? Does that allow a broker to take a different kind of relationship where they are more advisory and guiding, which is brilliant, rather than transactional? You don't want to be transactional if you're an intermediary, because then you're completely the same as anyone else who can transact. And so if someone rocks up and says, oh, I'll do it for this much less, brilliant. Transact for me at that much less. That is not a value proposition. So actually, I don't think it's about a threat to the channel. I think if you're not willing to embrace the change and the new tools, then yes, it is a threat to you in the channel, but it's not a threat to the channel. But we have to look at what are the new tools and the new ways of working so that we can create true value, so that insured, whether it's personal, commercial, life, health, whatever, doesn't have a reason to go off on their own. Because actually, I don't think it's about simplicity. I think in many of those cases, they probably will end up with the wrong coverage for what their needs are. They'll end up with the right price, perhaps, but not value. And insurance is not really about how cheap can you get it. Because when tragedy strikes, which it does, otherwise wouldn't be an industry, value ends up being destroyed really quickly if you just did it off of, well, what's the cheapest I can get this for? And that's when people start making these decisions like, oh, okay, I'll up the deductible. We don't need that much limit. That's fine. And then your car gets wrecked and you realize, could you really afford 2,000 pounds right now? Like, did you think about everything else going on? You've just had a baby and diapers are expensive, or nappies, whatever. Like, it's actually really difficult when you're outside of those moments to make the kind of decision you're going to end up making in those moments. And that's what takes the expertise to help guide you through that.
I think that this piece is really explained well with Neptune's story, because what they've essentially done, for people that haven't but absolutely should read your book, what they've essentially done is taken a product that was still stuck in the 80s and not not usable with today's requirements in terms of, quick, fast, and efficient. But what they also did, and you talk about it, is recognize there's two markets we're going to attack here. One is the people that have the NFIP product. They know they need flood insurance.
Yeah.
Let's go and attack them and tell them we can do it better, cheaper, blah. Or not cheaper, but better, whatever.
It is cheaper.
It is cheaper, but cheaper because of the administrative and operational
the
processes
unit economics allow it to be vastly less expensive.
100%. 100%. So they've gone there, but their second market is around education.
Yeah.
Why the however many 60 million people who should have flood insurance don't, and why they don't. And that for me is where intermediaries are moving, and you can see a lot of it. It's around this kind of education piece around what risk is, what business risk is, what emerging risks are happening, and that kind of education piece. And for me, that's where marketing ties in. That's what we do. We do the education, brand build marketing to the masses with our clients because of this kind of change. But we still do face some reluctance from, I don't do marketing. I don't need this. I'm fine as I am. I'm a relationship guy, and that's it. So we do face some of those kind of those hurdles, and I think it's really interesting having listened to some of this.
It's a yes and, because you still need to be a relationship person, but who are you going to have the relationships with? And so, what population can you educate so then you can work your magic and build those relationships? Neptune has a great offering around flood. The problem is, you're saying 62 million homes in the US that are at moderate to severe risk of flood. 5 million had coverage in the last stats that came out. So we're talking about a market that is way underinsured. My house flooded. I say that in the case. I did not have coverage because I'm not in a floodplain. I wasn't required to have it, so why would I? And being an insurance person, I knew I wasn't going to have coverage in my homeowner's policy, but it's irrelevant. Well, turns out it wasn't irrelevant. And, luckily I'm like super risk averse, so I save like crazy. So we weathered that storm. But if I went and priced a policy with Neptune, if I had bought coverage from the day we bought our house, even through to today, I'd still would have been less cost than paying for the repairs to my home. And it's, we've been here since 2008. So years and years on, I'd still have come out ahead buying this coverage. Oh, I'll never need that. The one time I needed that, 40% of my town flooded. It rained so insanely for days that the whole water table rose. It wasn't a dam broke or anything like that, which I think is what we think. It has nothing to do with that. There's lots of ways your house can flood. If they don't succeed in the education story, relationship or faster processes or simpler buying, none of that makes any difference because there's no one there to watch the game. You sell all the hot dogs and peanuts you want at the baseball game, but if no one even knows what baseball is or why they should come watch or cares about it, you won't sell anything. So it is education first.
Do you know, I should completely clip that segment
Yeah.
of this podcast and send it to Neptune and say, here's for your marketing. Let me do the rest. Fabulous. So you said at the beginning that you intended to write one book.
Yes.
And now you're writing a series. Are there more to come? And what angle are you going?
So I'm sure there will be more to come. I just put out, as we're recording this, the second book just came out last week. So I feel like I at least get the right to be like, I can take a couple weeks before I figure out what's next. I'm not totally sure what the next one is. I have some thoughts about it. And I've done a bunch of these like Clubhouse sessions and talks that have Q&A and whatnot. And they've always asked like, what should Bryan write about next? And I get lots of really interesting ideas. So I'm just sort of in absorbing mode. What I think is important is it's not to sell any of the cases in there. It's not to sell the companies that are there. They're not ads for anyone. They need to be genuine stories. They need to have a reason to be together in one volume, and they need to move the industry forward. So I need a space in the market where there's something really interesting going on, where we could dig in and take genuine lessons, so that I don't care who you are reading it in wherever in the industry, an investor or a claim adjuster, like whoever, you say, there's something here that is helping me to see how we move ahead as an industry. So it's more than just, oh, that's a neat case. There's lots of neat cases out there. I need to have some cohesion to it. And I kind of like this idea that the first book and the second book are sort of mirror images of each other. Even the
Yeah.
colors, like one's green and white, the other's white and green. So there's part of me that's like, is there a blue and white and a white and blue and a orange and what? I don't know.
Yeah.
But
There's
so I'm sort
OCD
of,
kicking in.
yeah.
I
So I'm
love it.
sort of thinking about maybe it's in the agent space, the agent and broker world. So it's distribution. It's the the legacy distribution, and then it's the sort of new generation. But I don't know yet.
Yeah.
That's my inclination. But I'm hearing some really interesting things. And of course, there's people asking, can you stop talking about the U.S. for a minute? Which would be great. The problem
I
is
would.
like the U.S. has so much insurtech activity that when I do the newbies or the startups, it's actually really hard to find enough meaningful cases outside because the funding situation is just very different. There are lots of great cases everywhere, absolutely. There's just almost too many in the U.S. and there's lots of ups and downs that we can talk about.
I'd love you to do what you've done in book one, which I haven't read but will, and book two, but based on UK stories. But
Yeah.
like you say, it's a much smaller market. And although there's a significant amount of PE money in the market,
Yeah.
I think the way the Insuretech has gone is probably not in the same way that it's happening in the US.
Yeah.
Question for you: is Clubhouse relevant to the insurance industry? Because I'm on Clubhouse and I
Yeah.
have searched Clubhouse for any of my contacts and they're just not there. Should
There's
people be getting in Clubhouse?
I'm my initial reaction was like, oh God, another social media platform that I can't keep up with. So I was iffy on it. I'm not really active in it, but I've been invited to a few groups. There's some insurtech groups. So I've been invited to, share about the book or talk in one of these. And actually it's really nice. I do enjoy it. It's a neat platform, not being on video. It's like when you take a traditional phone call, it's almost refreshing. You can like get up and walk around or whatever. So I like it. I think it's a great way for us to casually come together on important topics that we all just sort of need to, collaborate around, especially in a time where we weren't co-located. But lots of us aren't co-located, even when we all go back to offices, if that's what happens. So I think there's value to it. I don't know if it's a corporate platform in the way that, Twitter or something like that, the company has a way to engage. I think it's more a community platform for us. That's my take on it.
I
Yeah.
think so too. I think I don't know what the US is like. There's a lot of talk in the UK about the sort of the age demographic of the insurance industry in the UK. And I was on a conference, a 2-day conference over the last couple of days with the Chartered Institute of Insurance, and they were talking about this need to get some like young, fresh blood into the
Yep.
industry,
Yep.
and it's a struggle. They're really finding
Yeah.
it difficult. And I, like you, think Clubhouse is for quite entrepreneurially minded groups of people that want to share ideas, collaborate, and get out there. And whether that's coming in the UK or not, I don't know. I've been caught in a load of the conversations go on for like 44 days or something
Yeah.
ridiculous. Whew.
Yeah. My
Yeah,
wife gets caught in those more than me. But yeah, they do go on. There's a guy in Germany, Dr. Robin Kira, who's very much about social media in the industry. He used to be an agent, and he's big on TikTok. And I think if you think about engaging as a company, engaging with a younger generation, he talks a lot about how to make that happen. I'm not on TikTok. I don't think I dance well enough for TikTok, maybe. But yeah, we have the same conversation here about getting a younger generation in, and there's a few movements to try to do that. We need more of that, absolutely. And I
Yeah.
think that's one of the benefits of InsureTech is suddenly it gets people who would have thought about, oh, I should go work at Google or wherever. You could also think about working at some really cool insurance related businesses that are genuinely changing things and moving really fast and getting lots of investment. And so I think InsureTech, if nothing else, can help us a lot in the industry. It may not solve some of the like frontline underwriter and claims adjuster aging out issues, although when we have these InsureTech carriers, they have all those roles. So, I have friends who are underwriters at some of these startups, or several of the people who are on my claims team at Hiscox are at a particular startup, handling claims. Like, 2 of them are heads of claims at startup carriers today. So it is a path to bring newer talent that wouldn't have thought about a 300-year-old company, you know, that's big and monolithic and says that they're non-hierarchical and a meritocracy and all the things, but you know, are they really? It's interesting. I think it could be really helpful for the talent pool draw for the industry.
I think that this idea of software houses, technology companies, tech-orientated people coming into, that's where the entrance is coming, isn't it? And there's going to be such an amount, and I think you say it in the book, like we talk about, you know, composites, legacy, we talk about Insuretech. 20 years from now, there won't be that divide. It'll just be insurance.
Yeah.
And that's sort of the morphing that I see happening, which is just fascinating to watch and even more fascinating to talk about. So I really appreciate your time coming to have a chat about your book today. It's been really informative.
It's been fun. Enjoyed it.
I'm going to go away and read your first book as well.
Okay.
So I'll make sure in the show notes that links to both books are there, and I would highly recommend you go and have a listen. So thank you, Bryan. Thank you very much.
Thank you so much.
Thank you for listening to today's episode. If you have enjoyed what you have heard, have any questions or feedback, please leave us a review and we will be sure to get back to you. If you would like further information on how Boston Tullis Group can support your business, or if you would like to join us on an episode, please do not hesitate to contact us.